Okay, I'm live now. Okay, I want to make sure I can hear myself. Please share the link as you join. Sharing the link now to the Telegram community. I ask you the same. Okay, please, if you can hear me, um, comment on the Telegram community or on the comment section here, so I can continue, please. If somebody's hearing me, please. Okay, just shared. Um, Watching. I mistakenly turned on made for kids on the settings of this live, so immediately the video we're done, I'm going to change that. Made for kids video always have a low video quality and comes with some disadvantages, right? So I've already shared the link now. If not, I would have disconnected the live and continue again. Okay, so all right, I just got confirmation that I can be heard. All right, so today's market analysis, weekly market analysis won't be very long because we have talked about most things, and this week that just passed was NFP week, so mostly consolidations in some pairs that we do talk about, like the dollar index, the euro USD, and GBP USD. NAS 100 was quite volatile, but we'll be talking about these particular four instruments, right? So we will not be spending much time. Understand that. So we'll start from the weekly chart. Okay, first, I believe most of you, I gave clear what I call it, should I say advice, that you shouldn't trade NFP week Thursday and Friday. We don't trade NFP week Thursday and Friday, although some people were still stubborn to do so. I don't know if you made profit or if you made losses, but anyhow it resulted to, congratulations. We don't trade now, we don't trade on NFP weeks Thursday and Friday. Those days are kind of very indecisional. You don't, most times you have failed market profile or failed directional bias. Everything just turns upside down. But on Monday, which is tomorrow, we start at full-time mentorship, which always happen at the on the Telegram channel, right? So if you are not there, join with the description of this video. Okay, so we'll start from dollar index. Like I've said many times, dollar index is inverse um to our quote pairs. So whatever dollar index is doing, we should use it as guide on what to look for on other pairs, right? So first, this is the weekly chart, and we have this beautiful sell side liquidity here where I've been calling this place for the past 3 weeks now. You can see how markets have been consolidating first week, second week, third week. I wanted price to take out this particular low, but it's kind of over consolidating. The dollar is kind of sleeping right now. So I'm still expecting price to take out that low, but before it does that, what am I expecting? What's my directional bias for this week? Well, we'll go down to the daily time frame. Yeah, sorry, let me search for 1 day. Okay, so this is the daily time frame, and you can see these are equal lows, and I've always said equal lows are draw liquidity, always priority for price to take out, which price will surely do. But you can, I thought about inefficiencies, and we have this type of inefficiency here. You can guess that volume imbalance, clean volume imbalance there. I don't really know what's wrong with my mouse right now. Kind of hanging though. Okay, so that's our volume imbalance. And what do you expect for volume imbalance? Volume imbalance are draw liquidity, right? So I'm expecting price to trade into that volume imbalance for this week on DXY, which can be a draw liquidity for the manipulation phase on Nasdaq on dollar. If it's increasing, that means we'll be expecting Nasdaq to be decreasing, right? Because that's the main pair we focus on, right? So let's go to the 1 hour time frame. I think there is a breaker there. There's a breaker there, something like that. Okay. Okay, so this is, you can see the volume balance is very clear on the 1 hour time frame, and we have this high swept is equal high swept on dollar. I don't know what is really happening. My mouse is not picking these tools. All right, we have this high swept on dollar. We have this CB sell side imbalance, buy side inefficiency, which was not refilled. We have this breaker. You can see that's a breaker there, so you can annotate that as minus BR. That's what we annotate sell side breaker, selling breaker. Okay, you can annotate that minus BR. So I'm expecting price to open on Monday, target that BR, probably filling this inefficiency there, at that's our draw on liquidity because of the volume imbalance, trading below to take out SSL. So whatever you're doing, if you're looking forward to swing, like for those people that look forward to swing trades throughout the whole week, you should expect the manipulation phase to happen first. Then you'll be swinging the distribution phase. So whatever dollar is doing, dollar is increasing in price to trade into that breaker. You'll be expecting the rest of the week to be bearish. That's exactly inverse of what you want to be expecting for other pairs, right? So this is what I have for dollar index. Price with that high, and broke structure or whatever you want to call it, MSS, SMM, I don't care. That's just my breaking of structure, but I don't label that. So we have the sell side imbalance, buy side inefficiency. We have our breaker block here. So I'm expecting price to trade into that breaker block this week. So we'll be looking at that for the weekly mentorship. It's totally free. The channel is public, right? It's public. So let's look at Euro USD and see what Euro USD have been doing. That's for dollar index. Okay, GBP USD. Wait. Okay, Euro USD. Weekly time frame first. Let's see our possible drawn liquidity. Okay, so I've pointed out this particular drawn liquidity many times for Euro USD. We have this volume imbalance here on the weekly time frame, which is our drawn liquidity, and very strong. Like it's a magnet. Those levels are magnets to price. Price tends to go into those levels, react there, and probably reject, or you see the reaction there and know if price is ready to reject or if price is ready to continue upwards. However, those levels should not be ignored on the chart. When you see them there, that's a drawn liquidity. So throughout all these downwards movements, you should be expecting at some point that price is coming for that zone, and you can see price is gradually heading there. And I'm expecting price to reach for that level this week, hopefully for that level this week, or we might just keep consolidating since the market, the Euro USD market is sleeping right now, very slow, not really volatile like Nasdaq. Anyways, we have the daily time frame, and we have upside movement. There's nothing much to expect here. You can see that's why I don't treat currency pairs. This is why I don't treat currency pairs. Most of y'all that trade currency pairs are trying to. Markets like these are to be avoided because it's very indecisional. You want price to take out a certain low, it doesn't. Take out a higher low, low resistance run. In this kind of markets, they are very indecisional. I don't want to be trading this kind of market, but for some of you that trade, I'll still give you my or tell you my idea so you know what to do or expect with your own idea when you're heading for the new week, right? So let's go to 1 hour time frame. That's where we'll get our clarity since the daily time frame is very choppy. Okay, fine. 1 hour time frame. All right. So like I do say in many of my videos, when you're expecting a new week, right, on Monday, for Mondays, mostly on Nasdaq. I don't know about Euro USD, but mostly on Nasdaq. When you're expecting a new week, you want to check out for what price was doing the previous week. What did the price do the previous week? Where did it stop? What did it stop doing? So if it stopped on Friday giving a low or a high or imbalance, then Monday is likely to attack those lows. We have this clean Friday low here. You see this low, this Friday low. I'm expecting Monday to take out this low. If you are supposed to be bullish, right, I'm expecting Monday to take out this low. If you are supposed to be bearish, I'm expecting Monday to take out this high. But I cannot be expecting Monday to take out this high because we already have a sell side imbalance, buy side inefficiency here, which price already traded into that imbalance, dropped, price traded again. This is the market makers model, right? This is the market maker model. We have another movement of price trading into that mini imbalance. All these imbalances are clear on the 15 minutes. I just use 1 hour for my structure mostly, like to get that get the higher time frame on 1 hour time frame, get the high the fair value gap, sorry, on 1 hour time frame. That is the fair value gap that price will mostly respect. The rest on the lower time frame are mostly for entries. Okay, so I still have another fair value gap here, which I think price was refilling last week Friday but did not refill that completely. So if I'm expecting Monday, if this was Nasdaq, I'm not saying I don't know, I'm not familiar with the behavior of Euro USD, right? So I'm saying if this was Nasdaq, what will I be expecting? This is my point, this is my view. If this was Nasdaq, I'll be expecting price to take out this low for Monday, either Monday or Tuesday, creating the low of the week before we go bullish, because we are expecting price to trade into this weekly drawn liquidity. This high is our target, relative equal highs. Remember, they are also drawn liquidity. So price dropping this relative equal highs, these are buy side liquidity. We want price to take that out. But as market is opening on Monday, what do you want to expect first for that Monday? One, you can use the NWG, that's the new week opening gap, to know what to do on Monday. Or for Nasdaq, I'll wait for price to read this low, given that that low of the week before trading higher. So that's that for Euro USD. For the daily time frame, is too choppy. I don't know what to expect on the daily time frame, but for the 1 hour time frame, this is what I'm looking at on Euro USD. Even though I'm not going to be trading, I'll talk about it during the week on the Telegram channel. Right, so let's go to GBP USD before we head to Nasdaq. Okay, 1 week first. Let's look at the weekly time frame. I like breaking down my time frames like this, from weekly to daily to 1 hour, then 15 minutes, 5 minutes for entries and all of that. So GBP USD, for those that trade it, I don't trade GBP USD obviously. We have this high to be rated very soon, and we have this volume imbalance which might be refilled. For the weekly time frame, they higher the time frame, they higher the power of draw liquidity. The draw liquidity you see on 5 minute time frame, price will likely take that out. But if you have another draw liquidity on the weekly time frame or the daily time frame, that's where price is mainly reaching for. So 5 minute time frame will just be like your partials, where you take your partials, because that's the mini draw liquidity. So looking at this volume imbalance, that's my draw liquidity for GBP USD. That's where I want price to go to. But first we have this high and we have these imbalances here. Price is likely to refill all those imbalances here. So if you are buying as a swing trader, you know where to take partials from, right? You know where to take partials from as a swing trader. Let's go to the daily time frame and see our short-term buyers on GBP USD. Okay, so we've almost hit that weekly weekly buy side liquidity. We've almost reached there for the daily time frame. So I'm expecting price to do something with that this week. I'm expecting that very clear there. And for our short-term buyers, I think this should be clear now that whenever you have a break of high, you always expect price to retrace. Price cannot just keep going further upwards like that. It must retrace at some point to take out liquidity or fail to continue its movement. So if I'm looking at higher prices here for this week, I'm expecting this week to be bullish, because normally everything is bullish. You don't want to be buying when selling when everything is bullish, right? So I'll be expecting price to drop into this fair value gap. That's my short-term drawn liquidity. Price is dropping into this fair value gap before trading higher. And this is something similar to Nasdaq. Let's go to the 1 hour time frame. Okay, if you remember or recall what I said on the with Euro USD just moments ago, I said when I'm expecting price to open on Monday, I just have two things on mind. What did the last week do, and what is our new week opening gap telling us? So if price is opening this Sunday, I want to outline my new week opening gap, my NWG, to see what price would do, how price would trade around it. That can be my own entry, or I'll just take Friday low. That's our Friday low. Can see there. Perfect. So we have that Friday low. We have FVG beneath it. Some of you say this is another block or anything, but I don't really believe in that, because we have all this imbalance here ready to be refilled, and that's also daily imbalance, right? So I'm expecting price to refill that. If we are supposed to take this high, remember this high is our draw liquidity on the weekly time frame and also on the daily time frame. So if we are supposed to take out that high, we want price to trade down first before taking that high. In some scenarios, don't take my word for it, price might go higher, then come back at the end of the week for this, right? It happens like that. But either way, just expect price to refill that FVG. So anyone that happens first, you know how to find your entries and go about it, right? So let's go to Nasdaq weekly time frame. So this is what I trade, and I kind of study this particular chart every day. There's no day that passes that I don't look at Nasdaq charts. Every day of the week, I must surely look at Nasdaq charts. Each time I do this, I tend to learn one or two things, like something I might have missed during the weekend, or something that I might have missed yesterday. If I look at it today, I'll surely grab that. That's just the thing. You cannot expect to do this to learn this profession in just 2 weeks or 3 months or so. You need to give it the time, constant studying, the consistency. You need to keep putting in the time, right? Because you start learning today, I'm not promising anybody profitability. I've heard that question before. People asking me, me learning your course, am I going to be profitable? I think that's a very dumb question to ask, but I could not say that because it was asked in the podcast, right? So I'm not promising anybody profitability, right? These lectures I drop on the lectures I drop on this channel might be of no use to you. Many are called, few are chosen. It has always been like that right from the beginning. Okay, so if you still if you're finding these videos helpful and you're seeing what I've been teaching on your chart, then you don't think that it ends there or you finally know it all. I'm giving you footprint as to what to look at. You can find your own model from this. Pick out upon everything I've taught. You can pick one or two or three things, if not that much, like at least three things. Join them together, join all the puzzles together, and form your own model. Like this is your own model, whatever your name is. Maybe your name is John. You say this is John model. That's how you write it on your journal, right? And you should have two types of journal: your note journal for observations and questions, and your statistical journal. I use my statistical journal so I can track my record. I track my record during the month, throughout the month. What was my balance at this zone month, at this zone day, or the first week of January? I'll go to my statistical journal and see my balance, my closing balance at the first week of January there. So I do this like like accounting stuff. That's how I just track my record. Each trade I take, the risk I took, the profits in dollars, the loss in dollars, and the reason why I take that trade. I've been doing this for quite some time now. It helps me because every week I review my trades with those journal. My bad habit for those for that week, I have them there on that journal. So I like you to be doing these things too, right? Okay, so let's go to Nasdaq. Like I said, this particular market analysis will not be too long. People have been complaining for long videos a lot, so I'm trying my best to kind of minimize the longevity of my videos. They just be short and simple and insightful and helpful. Okay, so we have this rejection block on the weekly time frame. Like I said, the weekly time frame is the high probability of our draw liquidity. If you have a draw liquidity on the weekly time frame, price is going to respect that. Not that price don't respect the draw liquidity on the daily time frame, right? But you have a draw liquidity on the daily time frame. You have another one on the weekly time frame. For swingers, you can like extend your targets to the weekly draw liquidity because that's where price is aiming for, but thereby clearing all lower time frames liquidities, right? I don't know if you understand that, but you can replay the video to understand that particular statement. So that's my draw liquidity for Nasdaq right there. I don't know if anybody can hear me, but I believe you guys are hearing me. So let's go to 1 day time frame, daily time frame. Sorry.